Reforms to results, powering economic growth for shared prosperity. This session is a 10 series of Parthian Economic Discourse. So once again, good morning, ladies and gentlemen. Nigeria is implementing wide-ranging reforms across fiscal, monetary, regulatory, and financial market. The aim is simple, and I'm sure panelists here will speak to them as we go along. More jobs, to turn policy actions into real improvements that people can feel. More jobs, better services, reliable power, improved infrastructure, and opportunities for businesses to grow. Today's discussion will focus on how these reforms can move from plans on paper to results in people's lives. We'll explore how fiscal and tax policies can ease the burden on small businesses and support job creation, how monetary and FX measures can restore confidence for investors, how capital markets and infrastructure financing can bring critical projects to life, and how pension and long-term domestic capital can fuel industries, power, and renewable energy development. By the end of this session, we hope that you will take away practical insights on what the reforms mean for every Nigerian, or for all Nigerians, business opportunities to watch, and I think some of them have been spoken to by Mr. Bismarck Rewane, and the signals that show whether these reforms will truly make a difference to our lives as Nigerians. So I'd like to start this first session with a question to Mr. Taiwo Oyedele, who is the chairman of the Presidential Fiscal Policy and Tax Reforms Committee, and brings deep insight into tax and fiscal policy reforms and their impact on businesses and economic growth. So, Mr. Oyedele, given the need to increase revenue and fund growth critical sectors, how can tax reforms improve efficiency and compliance while protecting MSMEs, which remain central to job creation and economic expansion?
How many marks?
3 minutes.
All right, good morning, everyone. Thank you to Parthian's partner for inviting me. And it's good to see many people in the room who look very friendly. So let me start first by asking you a question, even though I was supposed to answer questions. You know, when you are a teacher, you can change the questions you want to answer. How many people in the room think that they'll be better off in 2026 as a result of the tax reform laws? Not even one hand. Now, if I then ask you why, you're going to struggle to find the answer. Okay, tell me, why do you think you won't be better off? Sorry? No, what tax? What tax? I want specifics. No, leave corruption out of it. CGT on shares. Okay, one. Any other reason? Fixed income market. Okay, number 2. Any other one? Multiple levies. Number 3. All right, payee rate. Number 4. Anyone else? Because I'll try and explain all those 4. You know, and surcharge, okay? You know they say knowledge is power, right? But you have to get the right knowledge. Otherwise, you make the wrong decisions, and they will have real impacts. I was going to Abuja last weekend from Lagos. I landed, and a gentleman walked to me really fast and said, "Sir, I always see you on TV. You are creating problems for us." So I smiled and I said, is there a problem I can help you solve? He said he had shares in Sterling Bank. Sterling Bank did right issues, and he didn't buy. And I said, why? He said, because we have imposed 30% tax on shares. I said, can you call your broker and quickly buy? He said, it has closed. Now, when you're a shareholder and you don't take up your right offers, you lose. He just lost money. He was going to buy less than 10 million. He's not even aware there's an exemption for up to 150 million a year. He didn't buy. So if you take the capital gains tax, What we have currently is that there's a 10% capital gains tax when you sell on gains. And there are people, one of our committee members have a foreign portfolio client who brought in some dollars about 12 years ago, bought shares of a few banks. They exited about 3 years ago. In Naira terms, they had made about 50% gain. In dollar terms, they lost 1/3 of the money they brought, plus the capital gains. They still paid capital gains tax of over 1 billion naira. At that time, that's close to $1 million. How is that good for the market? It's increasing your risk. You can pay, it's 10% on paper. It has no limits. In reality, it can be 1,000% of your profit. So what we have done is, I have been a big fan of the capital market for many years, even when I was in the private sector, is to say, can you bring down the risk in the market? Under the new reform, that person will be able to claim a deduction for their FX loss, which will turn everything to a loss, and there shall be no tax. There are people who borrow to invest in the capital market. It's not a crime. Today, nobody cares about your interest. They tax you on the isolated gains. You make capital losses, is ignored. We're bringing all of this together, and we said, if you're exiting, maybe not exiting, if you're selling up to 150 million a year, not more than 10 million naira gain, you don't pay any tax. If it's more than that, but you reinvest, it's actually a reset. The whole gain you've made is reset. No more tax on it. So why did we even do this new one? By the way, we are not looking for money because our projection is that government will get less money, right? It's because by 2022, the big investors, most of them exited, mostly foreign portfolio investors, and compounded our FX problem. So we said to ourselves, how can we incentivize people who want to stay a bit longer with us and not just come in to play games? So that was how we came up with that idea. So one thing I can tell you, by 31st December, we're doing grandfathering. So which means whatever gains you have as of that date, it's frozen, right? And I'm now even thinking, maybe we should just let people know that they can opt in and out if we can create that option. People will then start thinking carefully about what is it that they're paying. Egypt is now changing their capital gain tax rate to 0.125% of proceed. Nobody's complaining because 0.125% looks very small. But do you know that's actually more than our 30%? Because you have to ask yourself, 30% of what? The capital market lost 4.6 trillion naira on 11/11/2025. I call it the Black Tuesday. When I did the analysis, number of deals was over 20,000, total value about 23 billion, average transaction was 1.1 million. And I said to myself, the market before that had gained about 45% year to date. There's still market that goes up every time. Bismarck was telling us about NVIDIA, right? NVIDIA got to 5 trillion. Today it's struggling with 4. So people will take profit. There are other factors. But then once we started saying it was capital gains tax, no evidence, no data, we just needed to say it. We repeated it for 4 days. By the 5th day, it was on 10 p.m. news on channels. It was on the primetime news on Arise. There were people having experts saying there's a bloodbath. By weekend, stockbrokers were calling their customer, aren't you going to sell? Everybody is selling, no. So by Monday, there was a sell-off. So when we did the analysis, the whole of last year, from capital gains in the capital market, companies selling land, all capital gains in Nigeria, FRS collected 52 billion naira. So I said, who loses 4.6 trillion because they are running away from 52 billion? Doesn't add up. As part of the comprehensive reform that we have done, from January next year, companies will see a reduction in their corporate tax rate from 30% to 25%. Anywhere in the world, this will be headline news. the market will be excited. But in Nigeria, that's not the case. Because that's good news. We don't really like those ones too much. Another one, that's worth 1.5 trillion based on 2024 collection. 1.5 trillion that companies will get. And there's a bigger one. From next year, including Parthian partners, keep records properly. There's money for you to be made from next year. From next year, you will get input VAT credits on your assets, services, and overhead. Service companies never got this before. That's a big deal. It's worth 3.4 trillion naira based on 2024 collections. That is not exciting anybody, right? So my point to you is that you should be excited about the capital gains because it's a reform. We've taken away withholding tax on bonus shares. We've removed stamp duties on transfer of shares. I have a whole page of the reforms we've been clamoring for decades in the capital market that we're not able to implement. We've removed minimum tax on turnover and capital for businesses. That's a big deal, right? So be excited. Which other one did you mention? You mentioned PAYE. Now, 98% of workers in the private and public sector will either see a decline or complete removal of their PAYE from next year. Those are the real people. The top 2%, who are mostly in this room, and therefore not happy with me, will see marginal increases depending on what they earn. Yeah, no. If you earn 2 million, 3 million, you won't notice the increase, right? It's not a straight 25%. You hit 25% when you get to around 20 million per month. It's a big amount of money by any standard, right? By the way, if you earn 2 million naira or more per month, you are top 2% in Nigeria. Don't bother converting it to dollars. It's not necessary. But let me tell you the reason why we did that. There were two major policy objectives. Number one is we had this fiscal drag. You know, in the UK, they announced their budget and said they're going to freeze the tax band. And people said, no, that means they're going to be taxing the poor more. In Nigeria, we don't understand that concept. That is UK where inflation is like 3 or 4%. We are battling with close to 20% inflation rate. We don't understand that when you leave that band without adjusting it, you are punishing poor people. We were taxing poverty. We had dragged our most vulnerable people to the top rate of tax in Nigeria, and that's what we're trying to fix. And in trying to make it progressive, you see that we expanded the band before you get to that top rate. That's number one. Number two is Nigeria is the only major country in the world where you make the tax rate for corporates to be higher than the top rate for individuals, and then you complain that people are not formalizing. It's a contradiction. What you find in every country is I make the top rate for individuals to be higher than business. So you have the natural incentive to operate through a company, so you pay lower tax. We did the opposite in Nigeria. We needed to correct that. Part of correcting is bring down corporate tax rate to 25, take the top rate for individuals to 25. At least you begin to solve that problem. Now that's formalizing. Part of the question you asked me was, how do you raise revenue, informal sector, small businesses? Small businesses, if your annual turnover is 100 million or less, from next year is 0% corporate tax. You don't need to charge VAT. You are exempted from withholding tax on your invoices. You don't need to charge withholding tax when you pay your vendors. Most of your staff will be earning like 100K or less. They won't have to pay PAYE. Tell me what else is better news than that. From next year, there's a combined, because Bismarck mentioned this around, moving money from the private sector to the government. So we've been intentional about how we're doing this from next year. So this 98% of the Nigerian people will see an improvement in their disposable income because their taxes will be less. On the other hand, we said to ourselves, what is it that these people spend money on? It turns out the households spend their money, the bulk of it, if not everything, on 5 items: food, health, education, rent, and transportation. So let's remove the VAT from those items. For example, I'll just explain. I know my time is. I'll explain just one. Today, if you buy bread is VAT exempt. What it means is the baker should sell the bread without VAT. But the baker must have incurred VAT in buying the equipment in the bakery, vehicle to distribute the bread, the mobile phone to call the customers, and the airtime. Sugar, one of the inputs, has VAT, right? He bears his VAT. But of course, as a business, you do unto customers as the system does to you. So in calculating the cost of producing a loaf of bread, you add your VAT cost, add your margin, and determine selling price. When you buy bread, you won't see VAT, but there's a hidden VAT in the bread. From January next year, that changes. Bread will no longer be VAT exempt, it will be zero rated. What does that mean? You sell the bread with VAT at 0%. Every amount of VAT you have paid in producing that bread is refunded 100%. And that's huge. So we've done that for food, we've done it for education. If you have friends, family who run schools, whether it's university or kindergarten, from next year, good news for them. Education, 0%, but they have all the input VAT to claim. So the combined impacts of more disposable income and more affordable basic consumption makes life more meaningful. It also means that those of us who are doing business can position ourselves to take advantage of this extra money that will be available to the Nigerian people. I was on the plane to Abuja and I was sitting to a man who has a gaming, lottery, and gambling company in Nigeria. He said, Taiwo, great job that you guys are doing. I said, thank you, sir. He said, that's one of the reasons why he's very happy about the reform is that from next year, these people will have more money and they'll gamble more. Initially, I was sad. And then I said to myself, why should I blame the man? He's just positioning himself. The guys in the stock market could have changed the narrative completely instead of being negative. Do you know that about $60 billion is what our young people put into virtual assets, crypto, stable coins? That is not performing, right? The average age of investors in the capital market is 55 years. Old people like me, the young people are not there. The return on the capital market in dollar terms is around 50%. It has no tax because those guys are not investing $150 million. They're doing $200, $120, and there's no tax. The crypto they are investing in has less gain and is taxable. But what is the message we are telling them? There's 30% in the market. They won't come. So I don't spend all the time for all the panelists alone. The point is, if you take time to understand the reforms, which is why you see me everywhere trying to explain, I know it's hard. People just hear tax reform in their mind. They want to collect more taxes from me. But it's actually the opposite. You should be excited because there's money to be made from next year. Thank you.
Thank you, Mr. Oyedele. I actually do a judo for you because me too, I was learning a lot in this short period I've been here. And see, my people perish for lack of knowledge. But I also know that you're doing a lot in terms of trying to really communicate these things. But I don't know how much of it is cascading down. What I hear you say is that, first of all, there's been some level of engagement before now based on evidence to try to put some thought into the tax reform. Secondly, there's significant consideration for people at the bottom of the pyramid. And almost like trying to balance the Gini coefficient, people who, and getting people that are in this, most of them are in this room, excluding some of us, to pay more so that we can take care of the people that are under us. So it's actually very insightful. And I'm hoping that we'll be able to now see, Mrs. Samuel Ogbu, how this kind of reform that we're talking about, in terms of sequencing, which specific government actions should come first, such as tax incentives, energy supply improvements, or trade facilitation, to make sure businesses and citizens feel the benefits quickly.
Thank you. Good morning, everyone. First of all, I think I want to start by just commenting that the reforms, generally the macroeconomic reforms, have been incredible for Nigeria. We've seen GDP increase, we've seen current account increase, we've seen the FX rate being stabilized. and the difference between the parallel rate and the official rate really narrowed down to less than 15%. We've seen inflation come down. I think yesterday we learned that it's come down from, the 30s and so on to like 17%. We've seen FX reserves increase 10 times of imports. So everywhere you look, there have been fantastic reforms. But I think the biggest issue, especially today, as we're talking about reforms that are inclusive, is that these reforms have crystallized into 61% of our population being declared multi-dimensionally poor. That is a huge amount that you are leaving on the table. A large number of people who cannot participate in the economy, they're not only poor, they're also financially excluded. And so these are the people who are more likely to be impacted by food inflation. You mentioned that poor people spend money on food, on transport and so on. This group of people we're talking about spend 70% of their earnings on food. And they were the ones that were most impacted by maize and all the primary produce increasing. It was 5 times in their own basket. So we cannot talk about reform and we cannot talk about inclusiveness without there being a safety net, because it means that half of your population cannot participate in all the various opportunities we have. As businesses, we need to make sure that there are people who are empowered to participate in our businesses. So we have 86 million people on the social register, and many of those people need to get some form of social transfer, some form of cash transfer. So if there's anything that's lacking in the reforms, is that we forgot about the large populace, a large amount of our consumers. And I do think that first and foremost, you need to make sure that you empower 60% of our population who do not, who do not participate. I think the next thing after the most vulnerable is power, because you cannot have productivity, you cannot have an economy that each of us have to generate our own power. We all have to, crank up our generators every day. That's just not sustainable. The only people who are benefiting from that are those who sell diesel and who sell generators. So power is an integral part of economic development. There are statistics that say that you can increase your GDP by 1 to 2% just by generating power. And you can also shave off 2 to 5% of your GDP just by not having power. So I think that is critical in terms of sequencing. I know that there have been strides made. The legacy debt of the GENCOs, 27 of them, I believe, are now refinancing their debts of something like 4 trillion naira, which I think is a great thing. And AFC that I'm a part of has been very integral in terms of power projects. Historically, Ugeli project and Kanji were financed. And looking ahead, AFC is very involved in renewable power, and that's critical in a country like Nigeria. We have solar, we're a tropical country, and there's so much natural energy that we have that can be converted. And AFC has been involved in Lekela, generating 1 gigawatt of renewable energy, but this is something that we can do better, I think, in Nigeria. So I think power is the second thing. And, the third thing I think we should be looking at is trade facilitation and reforms around there. I see that, we've been talking about single window coordinating between different government departments, whether it's customs services, FIRS, central bank, and so on. And to just have one-stop shop, because that will reduce delays, reduce costs, and we're still importing a fair amount of our of what we're eating, some of the things, some of the inputs. So, all of those things help in terms of stabilizing price to have a cheaper cost. So that would be my sequencing. Thank you.
Thank you very much, Mrs. Samuel Ogbu. If you follow the trail of thoughts from Mr. Oyedele's submission about how ultimately there's a lot of benefit that will accrue to most part of the population, and even using the reform to try to tweak behaviors, for example, encouraging formalization, people going into capital market more, the people that are young, and then you now take it to the point where you agree with the fact that these reforms are kind of making, I mean, the numbers are showing, but what you are saying is that not much of it is translating down here to the bottom of the pyramid. And I guess maybe one of the things that will be very critical is the need for there to be some kind of serious handover of baton, or the sequence has to be very critical so that people can begin to feel the impact of these initiatives. So emphasizing government actions needed to further enhance the gains is one of the things that may I take away from your submission. To see how these gains or these efforts of government at reforms leading towards shared prosperity take place, how do we translate into the real sector? Can Mr. Odukoya help us explore the way and manner to mobilize long-term domestic capital to power the economy, given the challenges with power, with even reaching out to people at the bottom of the pyramid in terms of how you spread the benefits of these reforms?
Thank you very much, sir. Good morning, everyone. Let me take a cue from what Mr. Taiwo just said. For pension funds, you are totally tax exempt. So that's the beauty for pensions. I mean, that's the lesson all of us must take away from here. Before the monthly income is taxed, your tax contributions will be exempted. So everywhere we go, we try to preach the fact that beyond your RSA, try and also ensure that you do what we call voluntary contributions. It adds up. Ultimately, when you look back to 2004, where we are coming from as an industry, when the scheme was bettered, government then had about 2.4 trillion liability in unpaid benefits to retired government staffs. So fast forward from that time till date, we now have 26 trillion. I was happy when Bismarck was sharing his presentation. And what we saw was that he's projecting that next year we'll have about 30 trillion. So that gives almost about 4 trillion from his projections, 4 trillion mark and move. So what does that do? Everywhere, every place, investments are done using the domestic capital. I mean, it's safer. So when all of us saves in our pension funds, what happens, you are able to mobilize domestic capital to facilitate all of these investments, even into the energy sector, into power, into infrastructure. So from us, what has PENCOM done also to ensure that happens? In the last 6 months, there have been a flurry of investment regulations. Principal amongst them is the revised regulation on investments. He actually addressed quite a lot of things, expanded the various investment assets that we could invest in. For instance, infrastructure funds, now we are doing 10% for some funds. Now it's been increased to 25% for fund one. And they added another set of assets, agricultural investment fund. Very novel, very new. So that gives you the impression that the government itself understands that what will make things happen in the economy has to do with mobilizing capital. All right, so for us, the environment is getting clearer. We have more bankable projects, all right? In terms of regulations too, everybody knows what to do. Okay, the macroeconomic environment is getting stable, it's predictive, you could predict it. So PFAs really don't have any problems with how much and where to invest in as we speak now, because the environment has become more stable and it's predictive. So as we ensure that everyone contributes to that pulse, the funds will be tailored to all these assets to drive long-term economic growth. Thank you.
Thank you. Okay, so what typically happens is, and it's very common in among the fiscal agents, there are many things that are happening in silos. A lot of policies are in place, but not only are they not being implemented? But they're also not really like doing a lot of handshake, and so things don't. We're not able to scale to achieve the desired objective in terms of our national development. What I hear you say is that there are things also happening in that space, and that local capital is being mobilized, and regulation is also inducing it, so that people can access capital to be able to do some of these investments that are long-term in nature.
Exactly.
And that is very critical for our development. I'm aware, because I must also mention where I work. I work with AFC. We're looking at long-term money instead of all the time relying on foreign capital to be able to support MSMEs in Nigeria. Okay, so ladies and gentlemen, what we basically have done is to do an initial discussion around how reforms can lead to results and how that can help us to achieve shared prosperity. We'll go into the second segment very quickly. I think we're doing very well as per time, Ronke, just in case. I've been using that to eye you since, just in case. Oh, okay, so with the second segment, we'll now go back again to Mr. Oyedele, the man of the moment, and to ask this question. With rising government revenues, what fiscal choices can deliver shared prosperity through sustained investments in infrastructure, social services, and human capital, to ensure that the benefits of growth are broadly felt across all segments of society?
Awesome. I think I remember that you gave me 4 points. I explained 2. I think I should just balance the remaining 2. I explained CGT, PAYE. There was surcharge. So the surcharge is not taking effect from January 1st. And what I say is that I would recommend that we direct our effort towards, if and when that surcharge is being collected, how can we ensure that every 1 naira of it goes into road infrastructure? I traveled from Lagos. I decided to drive, and I went to Ikogosi. We're having a retreat with the Sub-National Internal Revenue Service. It took me 6.5 hours to go and 6 hours to come back. It was a nightmare. That should have been like a 3.5 hours journey. Roads are bad. I kept saying to myself, I saw a lot of trucks. So these guys do this every single day, trying to bring produce. How would it not be so expensive when it gets to the urban center? And you can introduce that 5% without impacting on pump prices, right? How many people are the wholesalers? Dangote plus a few guys doing imports. All you need to do is call them. If and when the price per barrel falls, don't bring down the pump price. Adjust it until you can accommodate the 5%. Imagine we are able to spend that money efficiently like we're doing with road infrastructure tax credit, where the likes of Dangote built Apapa Road, we see Lafarge, we see MTN, we see NLNG, right? Private sector efficiency and quality. That is going to be transformative. So you do the 5% without the pump price moving, and then you fix a major problem. So that's what I want to see on the surcharge. The other one was multiple tax. I think it was Bismarck that said that. If you remember, although what many of us remember about the one speech of Mr. President, the subsidy is gone. In that same speech, he spoke about multiplicity of taxes and said we have to address it. He followed up by setting up my committee. By the way, we had a session with journalists because we say Tinubu and tax. And I said to them, tell me one tax that this president has introduced on the masses. And I offered to give them 100,000 naira. They couldn't find the answers. Journalists who write every day. And that's because there's none. This president has suspended, reversed, repealed the most taxes in Nigeria's history. The first 4 executive orders he signed on the 6th of July 2023 were suspending taxes. They had imposed some carbon taxes on single-use plastic. By now, you'll be paying on those nylon bags that we carry around. Vehicles of 2,000 cc and above. We had the excise tax on telecommunication of 5% that was reversed. We had the cyber security levy. It was enacted in 2023 before the... So a long list like that. I'm not even... Because he's not complaining. I'm not complaining on his behalf, right? So the perception is that this man is there to just bring taxes. In the tax laws that have been enacted, many of the taxes have been harmonized if they were federation taxes or federal government taxes. For the subnational, it's a bit more complicated because the powers to impose those taxes and levies are in the Constitution. So what did we do? We sent proposals to the National Assembly to alter the Constitution to take out those nuisance taxes. You see radio levy, TV levy, bicycle taxes, there, even wheelbarrow. And somebody put those things in the Constitution, fourth schedule. So good news, those are bills to amend the Constitution, went through second reading, they went through committee stage, and now they are harmonizing. There is now a plan for them to engage with subnational. If you hear a town hall meeting, please go there and lend your voice. It makes a lot more impact than just complaining alone. But what I'm saying to you is that there's significant progress that I haven't seen before in my adult life in dealing with this multiple taxation. In the meantime, pending when the Constitution is amended, we've drafted a law. We call it Tax Harmonization Law for subnationals to enact. And I can tell you at least 5 state houses of assemblies are already processing these bills to enact them into law. So those are the 2 other ones I remember that I did not address previously. Now to your question about when you make more revenue, by the way, do you know that Nigeria is in a unique position to generate more revenue from tax without creating economic problems? Because the private sector is a better allocator of resources. So ordinarily, especially in a country like Nigeria, if you take money from the private sector into the public sector, it's less efficient and less productive. But because we are in a unique position, ours is different at this time. And I'll give you 2 major reasons. Number 1 is Nigeria has huge tax evasion, that these are vulnerable people that Madam spoke about are the one paying the taxes through PAYE. Remember when we launched VADES a few years back, 96% of the income tax revenue was coming from low-income earners. In which part of the world does that even make sense? So if you address issues of evasion, corporates, individuals, whoever they may be, what you do is, instead of currently where we are rewarding bad behavior and penalizing those who are doing their best to pay the taxes, creating a distortion where they can't compete, we're changing that. And then you remove the distortion. The second one is to do with incentives. We have loads of incentives that don't make sense. Not only is government wasting money, we are distorting the economy. Think about the special economic zone. It was set up for people to produce there and compete with the rest of the world. Before we knew it, they were selling into the domestic market, competing with companies here that are paying 30, 40% tax. How are they supposed to survive? Before we knew it, companies in Eric Moss, Rulere, local companies were being designated free zone enterprises. I said, why don't we just declare Nigeria as a free zone? So we just print Naira to spend and see whether that's a better option than having a well-organized tax system. So as part of the work of my committee, even though it's tax that most people know about us, the tax reform is less than 20% of the work we are doing. That's why it was set up as a fiscal policy and tax reform committee. So we have work on spending framework, budget, reform, including alteration of the Constitution to address this, priority of spending, and they're going into things like education, health, agriculture, and infrastructure are the priority areas. You know, instead of building an airport, and my friend from the aviation sector was asking about airport, do you know that the 2 most expensive airports in the world for taxes and levies are both in Nigeria? Abuja, then Lagos. And one of the major reasons why that is the case, despite our airlines are struggling to even just stay afloat, is because there are about 15 airports that have been built by governors that should not have been built. Many of them can boast of 2 flights a week, and it costs average of 300 million to just maintain those places, which they can't generate. When they hand over to FAN, because it's a safety matter, you must find the money elsewhere. The 2 most viable airports is funding our inefficiency in other places, right? So instead of building an airport because you are arrogant and you want to feel like you are flying to your state capital, There's another airport that's 30 minutes away. You can just fix the road. What if you spend that money to provide access road from farm to market? Changes everything. Schools. Anyway, so we're working on this. We can't go public with how we are appealing and trying to use legal framework to make the politicians spend the money efficiently, because if you call them out, you get the applause from the people, but you will not get any reforms done. And we're more interested in getting the result than the applause. Thank you very much.
I just go to clear chat because I don't even know what they're talking about, because they don't have the facts. So I think these facts are coming out, and I'm hearing for the first time, for example, that the work you do, the issue of tax, where you're most maligned in some quarters, is just 20% of the entire work. And I'm hoping that, as these things begin to evolve, and if we're able to cause some level of stability with respect to these initiatives, that we'll begin to see these reforms going into results that can help us to enjoy shared prosperity. What some of the people that you probably want to speak to at this point in time is, based on what you are saying, what you have said, we have seen situations where policies seem to conflict. Because this is more like a fiscal policy initiative, but there's also the monetary policy angle. And there are also regulations that need to be able to drive some of these policies. And ultimately, they're supposed to be the part that also handle execution. How can all these things be, really put together in a manner that citizens can begin to feel the impact of these laudable initiatives that are still being cooked?
Okay, thank you very much. Maybe I can illustrate with 3 examples. And the first one is a recent one where there was a 4% levy on all imported goods, and then it was reversed because even though the rationale for it came from a good place to try and make sure that oil that's being refined got a price benefit against what is being imported, but unfortunately what that 4% levy did was increase the cost of PMS and would have the potential of an inflationary impact, so it was soon reversed. And that's something that, had there been consultation around the ecosystem, I suspect that they could have come to a consensus before putting the levy in place and then taking it out. So that's one example. The other one for me, and I started off when I spoke earlier saying that the reforms have been fantastic. Personally, I ran a bank at a time where the reforms went there, and it was day and night in terms of the reforms that came into play. So they were very well conceived and done. But what I would say is the sequencing of those reforms. On the 29th, we all heard Mr. President, as you said, announce that the subsidy had gone. And then 2 weeks after that, in June, FX unification happened. Now, had it been done the other way around, I think we would be in a different place in terms of the FX rate. Had we started off, first of all, with the unification, but with assured supply, because we just announced unification, and all the foreign portfolio investors were wondering what was happening. Like, you could have told us this was coming. We would have, we would have said, okay, we're going to bring X amount of million, billion in to try and make sure that the rate is stabilized. But unfortunately, we did the FX rate afterwards. So it could have been resequenced to make sure that the supply was there, the FX rate stabilized, and then we took away the subsidy, because then we would have also landed at a different PMS rate as well. So that's something that I think, apart from consultation, sequencing needs to be done. And my third example goes back to something that Cher mentioned, which is something close to my heart, the Africa Continental Free Trade Agreement. And this is another example of money we're leaving on the table. There's 1.3 billion people that we can target, and it has the potential to raise GDP by another 450 billion or something. But how do you transport goods when you don't even have rail and road within your country, let alone rail and road? and air around the Africa continent is well now impossible. So we need to find a way for policies to align with our strategic intent, especially something as powerful as the Africa Continental Free Trade Agreement. Thank you.
Thank you, ma'am. Okay, so aligning our policies and with maybe the agenda of government in a way that we'll eventually be able to bring about results that will make difference to our lives is one thing that is necessary, and it should be done in a way that trust is engendered and that is properly sequenced so that you don't cause so much harm to Nigerians. Mr. Okoya, with the recapitalization of pension funds underway, and given what Ms. Samuel Obu has just said in terms of providing maybe some level of infrastructure that will take us to Ghana or to other parts of Africa, how do you see pension capital playing a role in the reform to results agenda? And for your industry, what would success look like by the end of 2026?
Okay, thank you very much. So you made mention of reforms that were aligned with federal government initiatives as to improving macroeconomic conditions. So what PENCOM 2 has done, as I earlier mentioned, in the last 6 months, the first thing, one of the things they did was to also push for capital increase for PFAs. So they gave some sort of minimum capital for every PFA now to also have, broken them down to tier A, tier 1, tier 2, tier 3. So the figure is 20 billion. Okay, so effective, it was 31st of December 2026 for the effective date, but later on it was moved to 2027 by June and then. So for this purpose, it tells you a lot. The idea is to ensure that PFAs also have enough skills. They are able to empower their risk assessments of projects. They are also able to finance long-term projects, develop skills in that area, and also some sort of building public confidence in the PFAs. Not only that, it also has to speak to the global markets. Okay, when you when you look at where we came from in 2004, the initial capital then was 250 million. So over the years, they moved the fund, the capital, 500 million, a billion. Then in year 2021, it was changed to 5 billion. And that what has been sustained from that time till date. So what this does is that it gives the PFA more room to even participate actively, even as a player. So what most of us don't really understand is PFAs are largely asset managers, really. And that's the truth of the matter. Just that we're not designated as such, but principally we are fund managers. And so as a fund manager, and you drive capital, you mobilize domestic capital. Okay, so the reforms recently brought up by the new DG that speaks specifically to infrastructure, just to address what Ms. Ogu just said. So it speaks directly to infrastructure. Infrastructure was expanded across all the funds from 10% in terms of rating, okay, 10% of your portfolio to 25%. So that tells you the impact it will make going forward. Also, they also included for private equities. Private equities too was increased from 10 to 15%. So encouraging PFAs to say, come, once you see projects that are bankable, projects that are properly credit enhanced, that have been properly de-risked, all right, you could put your funds into these ventures, all right? But at the end of the day, what's at the back of the mind of every PFA is to ensure that we get competitive returns, fair returns for our contributors. The idea is not just to throw the funds out there because we want to achieve some sort of economic. Yes, we'll achieve the economic viability, economic support for government, but at the end of the day, is to obtain fair returns for every fund, for every asset you invest in. Okay, I will give you one example. Of recent, I think mid-year, MOFI, Nigerian Real Estate Investment Fund, came up. And if you check all those who subscribed, largely they are PFAs. So they supported that venture because it's properly de-risked. I mean, it's bankable, all the regulatory provisions were met, and so it became a, bread and butter for a PFA to just invest in. So stuff like that, PFAs will naturally not create those assets, naturally, but anyone that has those assets and meets the regulatory standards, they are prescribed in the investment guidelines, purely prescribed. Once you can tick off the box one by one, then it becomes a deal for every PFA.
Thank you. So what I hear Mr. Odukoya say is that in this room here, if you're not thinking about it yet, there are reforms, there are policies, there are asset managers who are in control of over 4 trillion naira in assets,
26 trillion.
26 trillion, sorry, in pension assets, and everybody's aware that there are gaps. So perhaps at this point, it'd be nice to start thinking of coming up with a credible vehicle that can be on the demand side and begin to meet those requirements, so that all of us here can truly, make a difference in terms of value creation, so that this issue of reforms will lead to results, because there are Nigerians who are really driving this thing, and ultimately help to create shared prosperity for all of us. And we can see that those reforms, regulatory, fiscal, monetary, there are people like us who are now creating the demand side and creating the value for us to make a difference and improve the lot of Nigerians. Thank you very much for your commitment to this session, and thank you, panelists, for your contribution so far. It's not the end yet. Based on the script, we're supposed to have 4 segments. We're going to add the 3rd segment. I'm still watching. I can't see the time. That's the problem. Okay. So we are in the 3rd and final segment then, as a result of the time that I'm now seeing. And I would just like to maybe for Mr. Oyedele to just speak around maybe the nexus of interest rates and issues around the monetary this thing. How does, given the high interest rate and high debt environment, what fiscal measures can prevent reform efforts from crowding out private investment, especially in power infrastructure? Again, about power infrastructure. Or more like it, how can these fiscal incentives crowd in private sector in another way? Thank you.
All right.
Even I did a joke for you in the last, but this one you have 2 minutes based on the warning I'm getting from Ronke.
Okay, just 2 minutes. All right, so I think because Madam was talking about the sequencing, which is a valid point. I said I'm not sure whether the sequencing could have been different from what we had. Do you know that the major problem wasn't the subsidy itself? It was the, subsidy on PMS, it was the subsidy on FX. And if we had managed our FX well as a country, you would have removed the subsidy on PMS and you'd be paying less than 300 naira per liter. We've mismanaged FX for so long. It created a big problem for us. We found out even from the fiscal side that we have some policies that actually don't make sense. One of it is many Nigerian companies and businesses are asked to pay taxes to the government in foreign currency. Like, in which part of the world does that make sense? When we spoke to the central bank, it was the equivalent of $4 billion a year. You essentially ask your businesses to go to the FX market to go and bid for dollars so they can pay Nigerian government. Add zero liquidity to your FX, but create an avoidable demand against the naira. So we're doing everything to just crash our naira. So those are some of the things we've addressed now in the new tax laws. But I think beyond that, my view around interest rates is always different from the traditional economist. There is this belief, Bismarck is not in the room again, I wish he's here. Economists generally think that the monetary policy rate is the interest rate. It's not the interest rate. So they will tell you it has to be higher than inflation so that the real return can be positive. That's not correct. The real interest rate, if you believe that your inflation was demand pull, is what you get on deposit. That's what the vast majority of your citizens do with their money. They can't even buy treasury bills. Let's even say they are buying treasury bills. It's sub 20% today. Bond, even 10-year bond, sub 20%. How is it? that the reference rate is the highest rate. In every economy, you're supposed to add on top of the reference rate. That reference rate now is only acting one purpose: make it harder for each sector to borrow. Those are the guys where you add up to 27 for them to borrow. And my view, based on data, is that our inflation was not because of excess demand or liquidity. It was cost push, and we could tell where they were coming from. Energy costs, FX, right? Manufacturers are operating at lower capacity, yet they have more unsold inventory than any time before. People can't buy. That was why when they increased minimum wage, there was no spike in inflation. So we need to get our data right and use this, our economics theory, within context. Otherwise, we create more problems unnecessarily. But to your question, it's just really about how do we align? Because now if inflation is moderating and that benefits everyone, infrastructure spending, interest rate, exchange rate, and we're traveling in the right direction. Once people see that level of stability, Nigeria is going to take a jump in 2026.
Thank you. So what that means is these reforms will build confidence, and with confidence, things will begin to really stabilize, and hopefully we'll begin to experience that prosperity that we expect. Mrs. Samuel Ogbu, looking ahead to the next year or two, Mr. Aribani said that we're already in 2026, in November 2025. So, and most of his forecasts were up to 2028. So I guess this question is also along that line. So looking ahead to the next next year or two, what are 3 concrete things the government could do to consolidate the current economic gains?
Okay. I want to start off by saying I'm really rooting for Mr. Oyedele and all he's doing. And you'll understand why in a minute, because I think it's fantastic. You know, we as a country have historically raised less than 10% of our GDP as tax collection, while all the countries we laugh at are at 25%. You know, even you know, war-torn countries. So it's really important. The size of our government is minuscule for what we need to do. And one thing I think is hugely important, because the whole world talks about it, that we have this demographic dividend, okay? We're going to be 263 million in year 2030. Now, that's great, okay, but we need to look at that against the backdrop of some of the structural issues we have in our educational system today. The first issue is that we have over 18 million children out of school. 1 in 5 people globally out of school is a Nigerian child. That's the first thing. The second issue is that when they finally go to school and they graduate, 85% of us are digitally illiterate. That's what 2 studies are telling us. So all these people who we can use for the service sector and for outsourcing, you know, do not have the skills to do it. And that's a very concerning statistic. They're functionally literate, but they're digital. And we saw what Bismarck put up in terms of how digitization is happening in Nigeria, how fintech is taking over and so on. Yet we have all of these graduates who are not able to participate in this new digital economy. So back to my starting point. The reason why I'm rooting for you is that we can now raise enough money to deploy to our educational system, which really has been hollowed out over these years. And that's, you know, when, I don't think people balance it in their mind. All we're thinking about is we have to pay more tax. And that's not actually the case from what you've been saying. We're actually increasing the number of people who pay tax, and you're actually reducing for some. But if we don't pay our taxes, who's going to work in our institutions? Who's going to be the next unicorn? I mean, and we've been able to achieve all these incredible things in Nigeria with producing 85% functionally or digitally illiterate graduates. So I think that that's an important thing. The second point for me is around continuing to diversify our income stream as Nigeria, because we still are too dependent on oil. 90% of our FX is from oil, and it's only 5% of our GDP. Look at all the other businesses that Bismarck put up on the screen. So there really is a need for us to diversify and to look at non-oil sources of income. And I'll end with where I started in terms of making sure that these policies that are being put in place cascade. Okay? They need to make sure these policies need to result in tangible benefits for all of us, whether it's education, whether it's inflation, whether it's transportation. It needs to have an impact on the quality of life. Thank you.
Thank you. Thank you, Mr. Samuel Ogbu. I think, so essentially what is important is for us to be able to ensure that we almost like track the benefits of these various reforms and policies and see how they truly impact our lives. Thank you very much. I think at this point, we'd like to take questions from the audience, after which we'd have closing remarks, 1 minute per person, and then we'll call it a day. Hopefully, we'll be able to make some progress with respect to how reforms lead to results and how we can together share the prosperity of these reforms and the results that accrue.